It's time for the Big Three. We've got 3 stocks, 3 charts, and 3 trades. Rick Ducat joining us, as always, to take us through the charts. Here to take us through the trades today is Don Kaufman, the co-founder of Theo Trade. Great to have you both with us. Don, love to get your thoughts on this market action that we've seen so far this week.
Yeah, this week, once again, it's a little bit of slop-tastic. You really thought that Microsoft this morning may actually drag the S&Ps down. The day is still young. You can actually see rotations right now, though, within the tech sector itself. It just feels like nothing matters. Not financials, not energy, not retail. Nothing matters right now but tech. And we're literally starting to see, again, rotations within the tech sector itself. Obviously, Microsoft, just a little bit of a drag in the S&Ps probably through the remainder of this week.
All right, well, then let's get right into these picks that you've got here. This is not a tech pick. Your first one is Caterpillar. They are having a decent year, taking a look at their chart in the last 6 months, up more than 66%. Walk us through your thoughts on Caterpillar and if you're bullish or bearish here.
Yeah, this one's actually going to be a bullish trade. I'm going to start with the bullish trade, and why not? I mean, look at this chart here. It's absolutely spectacular. So, what I'm looking for inside of Caterpillar, I'll give you kind of some of the technical breakdown. Look, I'm much more of an options geek. I have tendency to look at order flow. And my anticipation at this point is with Caterpillar butting up at or near all-time highs, that call buyers will start to rush in and once again cause the gamma squeeze. And I like to hop on board with these types of gamma squeezes. And what that basically is, traders come in, they buy calls. The market-making firms sell them those calls. And if the market-making firms sell them the calls, they turn around, in effort to hedge the short calls, they buy stock, and buying stock forces, if you will, those shares to the upside. At this point, there's a decent probability of that kind of gamma squeeze playing out in just the next couple of trading sessions. So I'm going to go shorter duration here. I'm going to come into the 19th of December expiration. Again, very short duration. I'm going to be buying the 590 calls, which is just very slightly out of the money, and selling a 610 call. This is a really wide spread for me. This is a $20 wide spread, and it's done for about a $6.90 debit. So there's quite a bit of risk up front, but you're looking for this explosive move, and all we're trying to do is ride the coattails of the gamma squeeze.
All right, Rick, so as we look for this explosive move in what Don highlighted is a really nice looking chart, do you see the potential for us to continue moving to the upside?
Well, yeah, it's a pretty encouraging setup for the bulls here. And what we saw during this run-up, we hit our low points, as so many other stocks did during the tariff news shock. But then we saw the stair-step type of pattern where you have the sharp rallies, then consolidative periods, very, very fast movement to the upside here. But then we had a bit of a longer phase here where prices moved more sideways. We can see that our old high point here near about 545 lines up quite well with our worst closes. There were intraday fluctuations that went below that level, but in terms of the closing prices, that's about where price held on. Similarly to the upside, we have our resistance ceiling near about a 585 or so. 585.49 to be very specific was our best close, so that would be one level the bulls might be looking out for. We can also see that our shorter term downward sloping trend line has been broken, our blue line here. We are still hanging on to our upward sloping white trend line. So now we'll have to see if we do start to get that squeeze that Don was referring to. The thinking would be that the bulls would want a strong close above that previous close. We can see also that the RSI, our measure of momentum, is trending upward once again. Yesterday making a new relative high above its previous peak, as price also made a new relative high as well. Notice that we can see our 21-day EMA was supportive recently. Today, actually, during our downswing here from the open, 561 is about where that one comes in, so another potential level to watch. When we do also look at our volume profile study, we see very obvious volume nodes here corresponding with some of those stair steps that I was highlighting earlier. You can see that those areas are right around here near 520 or so, and then here 500 and about 470. So we can see to the upside, though, the old high close, +1 channel, lining up near 585. So potential resistance there. That's a squeeze potential.
Yeah, and we're just right below that right now, that 585 level you highlighted at 582.30. Don, before we move on to your next pick, your second in the big three, I did want to get your thoughts on this lawsuit from Bobcat saying that Caterpillar infringed on roughly 14 of its patents, and if you have any expectation that that's going to have any meaningful impact on shares.
No meaningful impact, especially here in the near term. You know, one of the things you'll learn about litigation like this, as long as Caterpillar is willing to eventually put a price tag to that, it's move on. It's a few $1 million here or there. Even if it's $1 billion, it's move right through it. And that's really what litigation comes down to these days: is putting a price tag on it. The shareholders are actually well aware. Let's move through it.
All right, so then let's move through it to your next pick. We're talking about Intel here. We are seeing shares down just ever so slightly, but we did get some reports saying that they may supply chips for Apple. So is that play in at all to this pick?
You know, ironically, we've seen this movie before. Has Intel ever done anything with Apple? Absolutely. But you know what? This really doesn't have any bearing on what I'm about to do in Intel, and that is I'm getting bared up. This is just simply too far, too fast. And in a marketplace, there's always going to be two-sided trade. So it's pretty evident the recent surge in Intel has taken us from like 3250 to 4350. Okay, it's an opportunity to fade this. And the fade is looking at a bearish scenario. It's not right here and now. This one I'm actually going to fade, and I'm actually going to go all the way out to the February expiration. And I just, you know, to sit here and to look at the technicals, they're incredibly bullish, as Rick is going to show here in just a moment. They're incredibly bullish technicals. But what is that fade? It's too far, too fast. Stock has to kind of retrench a little bit, would be my, interpretation of it. So I'm going to go all the way out to the February 20th expiration, Feb 20. Why so far out? Give me plenty of time for the fade to play out. I'm going to be buying 40 puts and selling the 35 puts. So it's a full $5 wide put spread. I love to use spreads because it helps me mitigate some of the volatility exposure in Intel right now. This trade is done for a $1.65 debit for that $5 wide spread.
All right, so as we take a look at Intel here, and it has moved, as we can see from the chart, pretty far, pretty fast to the upside here. And we're looking at a longer term play. What's the technical setup here, Rick?
Right. So we had our big push to the upside here. Then from there, when you do have one of these big gaps, oftentimes from there you start a new trend line or new drawing or what have you here. So if we connect these two low points, we get that trajectory here. You can put it across the high points. Matches up decently here. We're about at that potential resistance level here. So one thing to think about. Notice as well, a pretty decent example here of a head and shoulders type of pattern here, just pointing it out where we have the shoulders and the corresponding peak. Notice as well that volume was declining during that period, as you might expect with that type of pattern here. Certainly not going to play out every time. Much easier to point these things out in retrospect, but just this was a good example of the type of thing you'd be looking for with the neckline being around that 36 level. Now we've retaken that level. Now price made a good close above our previous best close here, 41.53. But we can see now that our trend line is still in play, but it's quite steep here. The steeper the trend, the less sustainable it is. So now we can see here that we have our 21-day EMA lining up with this shaded area here near about 38. That will be an area I want to highlight in our next chart here. We can also see RSI was trending downward. We broke above that trend line, but still stopping short of that overbought area. The bulls would want a move above that threshold of 70. So now when we add our other study here, volume profile, we can see that that's where our volume node lines up. So around 38 stands out as potential support, or an area, if you had a more bearish outlook, to look for that breakdown here. 34.81. Our 63-day EMA lines up fairly closely with that trend line right now. That might be where you might expect things to solidify potentially. But also, quick glance at our 5-year chart. We are near this kind of longer-term consolidation area here. So an interesting situation could arise if we do start to make our way up to that 45 level and see what happens if we can overcome that old barrier.
And as Don mentioned, we have seen a pretty substantial move to the upside in Intel so far this year, up about 116%. Your last pick here is Tesla. I can't wait to hear if you're bullish or bearish on this one, especially since we have got a big bear who has been very vocal in the markets about the feelings on the valuations of Tesla this week.
You know what? I'm not going to get deep into the valuation and so forth. Here's another one where, look, Tesla has channeled back and forth for the bigger portion of this year. I mean, channeled all the way from like 3 to 350 from like May to September. I just think it's going to pull back into the channel. Look, I'm just going to tell you, I am a fan of every product they've made. I've owned almost every product they've made, but at the exact same time, I'm still going to bear up here in the near term. This is not about fundamentals. Again, it's not about valuation. It's about some of the technicals here in the near term. The stock has just kind of stagnated throughout the course of the year. It's likely to pull back again. I think a comfortable place is between that 300 and 350 range, and it doesn't matter about some of the sales either. This is just, again, purely kind of this technical trade. So once again, I'm going to go out to the February 20th expiration. And I'm doing that because, look, a little uneasy about the timing of a pullback. And this is a fairly substantial pullback. So the Feb 20th expiration, I'm going to go out and I'm going to buy a 400 put. And then I'm going to sell the 390 put. Even though I think we're going to come down more than that, all I'm going to do is just take a little lump sum from that 400 level. I'm going to buy that 400 put, sell the 390 put. It's a $10 wide put spread. This one's done for a $3.75 debit. I'm just trying to take a little chunk out on the way down in Tesla and kind of reassess from there. Longer duration, and I think about, years. I'm not necessarily bearish on this underlying. Just in the near term, pullback is probably warranted.
All right, Rick, so as we look at the technicals and we know from the numbers that Don just threw out, we're looking at roughly about a 10% pullback from where we're trading right now, around 438. What's the setup look like?
Right, so 400 stood out to me as well. If we were to backtrack a little bit, there was a small gap here. And from there, though, it led to a precipitous decline. That was about where we stopped here before another breakout. That's about where we had some chop and consolidation here. For the most part, the closing lows align with that area, except near the end before we broke out of that trend line to the upside here. So now we find ourselves kind of in the middle of our range once again, 400 on the low end, 463. All the way back over here, we had two of our best closes during the past year. That price, once again, struggled to overtake. So we had this double top here with this zigzag type of price activity in between. So now we have the bulls would have their eyes on that 463 level once again, potentially. Meanwhile, the bears might be eyeing 400. So when we do look at our moving averages here, they are trending upward here. The faster 21-day is starting to slightly diverge from its slower counterpart there. That one comes in near 425. It was supportive yesterday here, so that could be an area to watch going forward. Downward sloping red trend line and 50 midline on the RSI were broken, so now we are enjoying more of a bullish uptrend so far. So when we do look at our volume profile and standard deviation channel studies, we are in the thick of the volume node here that stands out the most near current price activity. Things really start to drop off above 440 and 420 would be the lower end boundary of that area too. We also have our +1 standard deviation channel just above. So it will be really important to see if we do push out of this volume node area and retest 463. Otherwise, that 400 level stands out to the downside.
All right, and right now at 438.70 for Tesla, they are trading up about a little over 2% higher on the day. Now, Don, before we say goodbye, I would like to ask one final question and just know, do you think that we have the setup for a Santa rally coming into the end of the year?
No, I actually think the Fed next week is actually going to cause quite a bit of volatility. Look, I know the Fed, the cut is actually baked in. There's no question about that. Some of the statements, though, inflation's still a problem. And I think you're going to hear that. I think you're actually going to hear some hawkish statements. Look, everybody knows Jerome Powell, he's out of the contest in a couple of months. He's going to take shots at this marketplace to some degree. He's going to take shots at the administration. At this point, what's he got to lose? Look for some hawkish tones and some volatility to hit this marketplace, again, off that Fed announcement.
You're not alone in that. We talked to David Wu on Market on Close yesterday, and he had the same sentiment. He thinks there will be a hawkish cut and a lot of volatility that follows. Don, we appreciate you being with us for the Big Three today. That's Don Kaufman, co-founder of TheoTrade, and of course, Rick Ducat, our lead market technician here on the network, for breaking down the technicals.